Good morning, everyone. Welcome to this edition of Taking Stock for the month of July. And wow, what a month it was. Incredible amount of volatility, incredible amount of very unnatural events going on in the market, which were basically created by just insanely stupid leverage and risk-taking. So you've got to remember that the month of July is a month that you can't really overweight in terms of impact, because there were so many things that were just not one-offs, but they're not things that are likely to be sustainable. So that's kind of the framing of it. But having said that, I'm also aware that because there's been so many things going on, that you may have been overloaded with information. We felt we had to do that because we need you to know that we're doing everything that we can to get us close to the probabilities that we're comfortable with. So we're going to keep this video a little bit on the shorter side, because there's still a lot of things have been, as you'll see, a lot of things have been clarified in the last week or so, but there's still a lot of things that are uncertain, and we'll continue to keep you in the loop as we roll those out. So this is the licensing information and a reminder, general advice only. So from me today, I want to give you a sense, but very briefly, of where I'm hunting. I think everyone pretty much knows where I'm hunting, but there's certainly some additions now. Why Friday videos have become far more educational, and it's pretty obvious. I mean, this is just such an incredible time for you to learn that we couldn't pass up the opportunity to move you significantly forward in understanding why the market is doing what it's doing and how to get a better sense of calm, that the whole show is not falling down around our ears. Now, it's made them a bit longer, but nevertheless, very, very important. And also, really important is what's coming. So we'll get to that right now. So one of the things we've been working on for some time, and it's been really a very large project. This is just an example. It's on DroneShield. It's just one that we happen to be looking at. There's nothing to be read into this, other than DroneShield could present an opportunity. But this is the basic information that we are distilling from out there, from the mountain. This is our distillation of the mountain of information that is out there. And those that have got a quick eye will notice that over here, we've got a 20-page report. And it goes through everything that we need to feel comfortable that we're fishing in the right hole. That's what this is meant to do. Now, we think this is way, way beyond what any member would be interested, but we never cease to be surprised. So there might be a couple of members who enjoy ploughing through this. But this is everything that we think is important and everything that we take into account. And in this case, this was a company where governance was certainly an issue. So this goes on for a lot of pages, and it's extremely insightful, and we think it covers everything that we need to know about, not to be perfect, because fundamental analysis is never perfect. It doesn't need to be, and you distract yourself if you try to get perfect. But this is still a process in refinement. Okay? So this is not necessarily the finished product. And one of the questions we've got is, to what degree do we need to reduce those 20 pages, or whatever it is, down to something that's manageable for members? And at the moment, we've got a 2-page example, but this may not be the final document. So we're considering, what is it that the typical member would want to see from us to make a decision to buy or to sell? That's what this gets down to. And so this is the condensed version of the 20 pages. It's in 2, and it gets into things that are really important. It's not just the financial fundamentals. It's, what is the market looking for? What is the central thesis? What is the market still looking to be convinced about? In this case, order conversion, margins, recurring revenue models, governance, valuation, etc. And then we've got a scenario map, which is a bullish look, a bearish look, and a base look in the middle. So that is what's coming, and then the decision points that we will make. So we're working on it as hard as we can, but we've got an awful lot of balls in the air. You need to know that this is pretty much all Justin putting this together. He's done a phenomenal amount of work in terms of the quality of the output that we're now getting from the AI models that he's created. So an enormous tick there to Justin. Okay, let's jump into it. So very quickly, an overview. This is the NASDAQ. This is a wider view on what the market is telling us. This is not what we think. This is not necessarily what the fundamentals are pointing to. This is what the market is saying by its buying and selling action. The market's no longer rejecting the whole CapEx fear, if it ever did. And the reason I say that is that all this leverage in the Korean memory stock market just distorted markets stupidly. So I don't know that there's a lot of conclusions that we can draw from that period. It's pretty clear that it's rewarding companies that are showing the revenue growth, the utilization of AI, and the operating profit proof. And we'll look at a couple of charts in a minute that show you that quite graphically with the hyperscalers. There is now less fear around the AI demand. First of all, the hyperscalers are still doing it, and there's a good possibility that the incredible volatility we saw was not just about fear. It was about leverage unwind. It was about forced selling. Selling where people did not have a choice. They had to do it. So there's a lot less fear around the AI demand and the economic return. The breadth is getting more positive. And the fact that a lot of closers are closing on the highs, positive closes, as you can see here. And that's a healthier rally when those two things go together. So where we stand at the moment is that it's not yet at all clear on the whole AI food chain, from hyperscalers all the way down the line through the memory stocks and through the neoclouds and all those guys, and then of course down into the contractors who do cooling and electricity provision and all those sort of things. So it remains, in fact, it probably is becoming an even more highly stock-specific environment. The next test will be if these gains can hold for 5 days. And also some of the others, some of the infrastructure players, like Vertiv, for instance, in the cooling area, if they can begin to participate in the rally. So that's the overview. The S&P, really interesting. We're basically at all-time highs. Incredible. For those of you, I'll just touch quickly on this because you may have read in the last couple of days about a fund that it's called Situational Awareness that absolutely blew up. It was insane. The guy running it, who was only 23 and became overnight superstar, broke every rule in the risk management book. It was just quite stupid, really, what he was doing. And it completely blew up, and it's been taken over by a fund called Citadel. That created a contrived and very unnatural market, and that distorts our interpretation of what we would normally be making of the buy and sell behaviour. So the unwind overhead has been mostly removed, And so it's highly probable that we're returning to normality. That's if, and these are the hyperscalers, it's just extraordinary. Look at the gaps, the length of the candles, where they finished, the volumes, incredible. Let's Google, look at Microsoft, look at the gaps here. There's got to have been an unwinding of short positions. This is short covering as well. And I understand that the situational awareness fund was long, particularly memory stocks, but was short software stocks. So I'm sure that's some of that still unwinding. There's Amazon, that's just incredible. We went from a close at 235 to an open at 265. We're talking about a $3 trillion company. All right, let's move to the first question now. For Kevin, waiting to load up, I guess as many members are. So the question with no real answer, but I'll ask anyway, is given we make money from the meat of the move, not catching the bottom eighth during volatile conditions, how do we separate a follow-through setup, which we act on and buy on, and a mere 2 to 3 day reversal in a downtrend, which we want to ignore? Look, exceptionally good question. It's not easy, but there is an answer to it, and it's probably a little more obvious than what you may think. But what you've got to do is, I guess what most investors don't really want to do, and that's interpret the whole thing, because you've got to be into this stuff like we are. We crawl all over charts constantly. So we really love this stuff, and so for us it comes naturally, but for 99% of the population, it does not come naturally. But the way you've got to do this, everyone, is you've got to consider the hole. You've got to consider the fundamentals. Are we in the right fishing hole? Because if you're not in the right fishing hole, then all bets are off. There's no point in even getting to the charts. And then we look at the money flows, but you've got to look. You can't look at this. You can't just look at the reversal and say, is that a yes or a no? Is this a 3-day bounce that's going to fail and come back down here? Or is this the start of a fair income reversal, a sustainable reversal? And the answer is you can't get it from here, but you can get it by going maybe all the way back to here somewhere. You've got to find reasons for the price to keep falling or reverse. So it's a probability situation, but you've got to look at who's controlling the price action. And is it a little bit of positive price action, or is it an emphatic reversal? I won't go through Triple Q because I've got many others that show it more graphically. So I'll just whiz through these because Kevin and others, I'll give you 100 different price patterns. So this is really, I've said this before, it's a lot like developing a taste for red wine. To really be able to pick up the nuances, you've just got to drink a lot of it. And to interpret it another way, you've got to look at a lot of charts throughout all the cycles over the years to really get it. And to do that, to commit to that, you've got to be into it. You've got to love it. Otherwise, you're not going to do it. If it's a task that you don't want to do, but you feel you have to, then you're not going to do it. So you're far better off bouncing off someone like me who just loves this stuff, been doing it for decades. And I think it's safe to say that I've got a better sense of those nuances than people that haven't had the exposure that I've had. So this is PLS. This area here in the green box, I'll move it away. But for me, that is not the start of a reversal. Why? Well, first of all, we look at the volumes. Nothing much happening here. No real change in volume. We've got a downtrend. We've had a couple of significant candles before it. Who's in control at the end of that day? The sellers. Who's in control at the end of that day? The sellers. Now, we've got an undecided day. Doesn't tell us much. Then we've got a positive day, but we actually closed lower. So we've gapped down. We've traded up, but the sellers have come in again. So that candle there tells you that a reversal is unlikely. It's possible, but it's unlikely. Then we've got indecision, 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 and then rollover. And down we go again. Okay, so that is definitely not a reversal. That's a continuation, no question. Look at the reversals here. Is this a reversal? Well, no, we gapped up, we traded up, but then we closed near the lows. So that's not the buyers regaining, it's not the action of buyers regaining control. Neither that, and so it continues down the line. And we're still in that position. Is Intel reversing now? Well, I doubt it, because this was such a negative finish. And then we gapped down, so the sellers are still in control partway through last night. We rallied up a bit, but then the sellers came out again at the end. So that is not a validated reversal. Now this one is clearly a powerful reversal there, but that's an uptrend. This one, now this is different, because we've got a gap, so huge gap, sellers absolutely in control, but is this part of the unwind, the leveraged unwind from that fund? Probably. You'd have to say that's a good probability. But then we get a gap up on the particular day on Thursday, but it trades down, so the sellers still controlling the action here. Same again the next day, but a little less so that's Friday. But then last night, we gapped down, but look at the finish. And the only thing missing here, I would have liked to have seen more volume. Now, there's more volume here than there is through here. And this was largely low volume stuff, which lends support to my view that this is going down, not because a whole bunch of people want to get out, but it's going down for other temporary reasons. You are right. Is this a base? Reversal? Not enough information. But I'm watching. Credo, again in the semiconductor space. Yeah, this is strong enough now. Again, I would have liked a bit more volume last night, but this is now strong enough to elevate to the, yes, I think this is probable for a reversal. It's probable enough. Now, a question for Nathan. I've just put this up on the MU chart. And Nathan's question is, they say everyone has a plan until they get punched in the face. Volatile periods like July really drive that home. In practice, that punch usually lands when a stock you like smashes through national stock with force. Over a turbulent month, dealing with those stocks builds up genuine behavioural fatigue. I know, and that's one of the reasons that we've been just so much more in depth with videos and the reports, the alerts, because we know how you feel, because we've been there for decades. I'm being tempted to pull the trigger early out of anticipation or hesitating and lagging behind the recommendation. This is all normal, natural stuff. We'll have our primary trading plan. Is it possible to structure a plan B specifically for when you metaphorically get punched in the face? What is that routine or once do I use to handle that? Okay. Look, the answer, Nathan, is yes, absolutely, you can. But it assumes that you have got yourself to a position that is sustainable, which means acceptable exposure in cash. Because if you haven't moved to that position, then, of course, it'll be incredibly difficult to make decisions. So that's why you need to rapidly move to a place where you feel comfortable. But if you do that, then some of the things that you could do would be to buy half on a confirmed reversal, but put a stop loss on it. So you treat this not as bolting on the second half, but saying, well, this is a completely separate transaction. It just happens to be in a half-size position. I've got the first half, and I'm happy to sit on that for the next couple of years with all the volatility, so I'm okay with that. But with this one, because I'm not sure, I could buy a portion, but I'll put a stop loss here. I'll put a really tight stop loss on. So there's many things you can do. And if you don't know what your options are, then you know the course of action you've got. You can email me. All right, so the next service is on VRT as an example, but also we look at TTMI as well. I've got some advice on when to add to your position if the weighting is not full, when your initial entry price is much higher than the current sold-off price. That is linked to the question that Kevin asked. Presumably, if you have recommended as a buy at a higher level, then a much cheaper price is much more attractive. Yes, under some circumstances, I'll come back to. I understand we should wait for sentiment to change to the upside. It's not just about sentiment, it's about a check on fundamentals as well. High volumes and upward turning price is that yes, but you really need me looking at the whole thing, as I went through before. You can't reduce picking reversals to ticking a couple of boxes. As I said before, you've got to have the enthusiasm and the ability to look at the whole, which might be the last 3 months, to get a sense of what's happened. I'm conscious I could decrease my average price considerably, and especially if I'm thinking long term. Please don't think about the motivation for doing this as reducing my average price. That is a really bad thought pattern that takes you to places you don't want to be. It can put you in a terribly difficult situation, even though it seems logical. Okay. Also, are you looking at all previously recommended but now stopped out stocks for potential re-entry? And the answer is yes, providing they still, so let's move over here. So the first thing I would do with a stock like VRT or with TTMI, which I have continued to follow those, so it's not a universal follow everything that we used to be in, but I do keep loose tabs on them. And the first thing I would do is just recheck that we're in the right fishing hole. So just do the basic fundamental analysis, or the 20-page analysis that I showed you before with Drone Shield. But whatever we need to do to make sure we're still in the right fishing hole, the fundamentals are still okay. And then we look at what does the overall price pattern convey, who's in control. It's a great reversal candle in this case, but lacking volume. So again, just not quite the conviction that I would like. So we can either do nothing, but I'm sure most of you are getting sick of doing that. Or you could say, well, let's buy in the 250 to 260 range. So that's sort of here. We're looking for a little bit of a pullback because last night probably was a bit of over-enthusiasm at the end. So we buy in the 250 to 260 range and we put a stop at 220, just down here. So that way you're only risking a small amount on the subsequent trade. So keep your initial trade, that's fine, but run a stop on your second trade. So the thought pattern here, a much better thought pattern than averaging down, is how do I control risk on this particular parcel of investment? Yep, better way to think about it. It doesn't lead you to places you don't want to be. All right, TTMI, as I said, I'm still, there's nothing in that price chart that would draw me in at this stage. But as soon as I see something more positive, then I would recheck the fundamentals. We're in the right fishing hole. Yep, how do I want to structure the second part of this store, have a stop on, and go from there. And this is for Jake. The recent peak in the Korean market looked like a classic blow-off top. Well, now, in hindsight, I don't see it that way, Jake, because there's nothing classic about what just happened. It was contrived. It was unnatural. It wasn't the euphoria that you normally associate with it. Now, I know there was 1.2 million Koreans who were involved in this, so that there's a herd reaction, but it was certainly started by the Situational Awareness Fund. That was the catalyst. If that catalyst hadn't happened, I doubt you would have had the 1.2 million souls come in with a third of them getting completely wiped out. So what lessons should investors take from an event like this, particularly as capital begins rotating within the AI trade and speculative enthusiasm potentially builds elsewhere? More importantly, how can we avoid being caught on these specific indicators, et cetera, et cetera? So my points are totally contrived market, so that weakens conclusions that we can make in either direction. Just beware of crowded leveraged markets because they can never work. They can never work. Now, the excess was obvious, but I was doing what my approach dictates, and I was letting the market take us out. However, as I've said in a couple of previous examples, you could elect to do something a little bit differently. Just think it through and do it consistently. So in this case, you could have elected to, say, take a quarter out of NU if that was the stock you had. A quarter when it did something like this, and then another quarter down here, and then another quarter down here. You could have elected to do that, but just do it to a plan, not doing it on a day-by-day emotion. You wake up, oh my God, the market's done this, I better scramble, panic, and sell some. Don't do it that way. Do it to a plan. So when you see the fact that 99% of people have run to one side of the boat and they're using leveraging margins, then that puts you on alert. All right, just very quickly to finish off, I just want to show you both in America and in Australia where we're looking, where we're going. Some of it is a continued weight. So gold, there's still no signal there from gold. And there's the spread of gold versus the S&P. So we're just not getting a leg up, so we're still in waiting mode. Quick summary of where we sit with gold in both US and Australia. It's undeniable that we've got long-term substantial upside. We just need a signal, we're still waiting. And that signal could come at the bottom of the range. So here's a range through here. So we want to be buying more towards the bottom to reduce our risk rather than in the middle, or a confirmed reversal. So we've got just a heap of stocks that fit into there. Copper, exactly the same. We've got a bunch of targets there. Evolution Mining offers both copper and gold. We've got software in Australia. And these are all Australian examples, but we've got an absolute suitcase full of American stocks that are in the right fishing hole. We're just waiting for what we need to see. And that, certainly in America, we now have enough confidence to be starting to pull the trigger on some things. So this is software. This is just one example. This is not a recommendation. Lovisa is really interesting. This could find its way to being a recommendation in the next day or so. So I put this in the general top class opportunity. This is a really, really classy fundamental stock. But there are some other considerations. And then we've got the energy transition contractors. We probably needed a valuation reset because they're all fully valued to overvalued. So we've had a valuation reset. This bit doesn't say anything at all about the company, although the market loves to hypothesize and say, well, inflation's going to be a problem and getting enough labour is going to be a problem and this and that, and maybe AI data set thing won't go as well as it. This is all just supposition. The long-term outlook for these stocks, GMP, TEA, SXE, just remains very, very compelling. So again, what's our signal? We can buy the bottom of the range. We're pretty close to it now. We can buy a confirmed reversal. In defence, Drone Shield, just an example. Not sure I'm ready to pull the trigger on that yet. We can have copper and critical metals, like DVP, or we can have critical metals, which we've got a lot of categories here: lithium, rare earths, uranium, antimony, and others. So we're still in waiting mode on this. Finish off with the last couple. This is BTSG, which delivered a really, really good report, and but got slammed on Friday. But got slammed not on meteoric volume. So for me, the report was so good that I just want to give this a little bit, just a couple of days to see what the market does with it. Last night was definitely undecided, so we'll wait a little bit longer. And the final one is a stock that I mentioned, a healthcare stock, about a week or so ago. It was looking, the chart looked absolutely fantastic, breakout was on the cards, and now it's back in the box. So that's it for this rundown. You'll be kept informed every step of the way, and hopefully we can get those PDFs on the stock fundamentals out to you as soon as we can. But we've just got to be careful we don't create a monster for ourselves for a start. It's got to be manageable within our constraints, but also that we're delivering a product that is digestible for members. So that's where we're at. Be back with you on Friday. Cheers.